Okay, well, Anurag Singh is a managing partner at Ansid Capital. Anurag, good to have you on the program. Good to see you. Thank you for joining us. So, what's the view, Anurag? You know, earnings, global seems pretty okay. Earnings here, as expected for the second quarter, is all coming in a little subdued, but markets were anyway focused on the H2, and markets here in a bit of a flux. What's the road ahead?
Good morning. Happy Friday. Prashant, you're talking about Indian markets or US? Let's start with the US.
Yeah. Indian markets. Why don't you take us? Yeah. You start with the US and then sort of come down to India. Yeah. Go on.
Makes sense. So, Prashant, US is all clear, right? And, Federal Reserve is cutting unemployment 4.1%. That's hardly any sign of trouble, right? And keep in mind that for the peak of 4,800 that S&P touched sometime in November 21, it was crossed only earlier this year, right? So market has been range bound, between 3,500 and 4,800. And it took like that, the time correction of almost like close to 3 years, in that range. So I think there is a bit of a, bullish sentiment. I think it's quite well placed. And I think both on earnings front, S&P is likely to hit about 250. Markets are at 22 multiple, but you've got to separate these top 7 stocks from the rest of the 493. And then I think if you do that, you realize just about 20 trillion is coming from these 7 stocks, and rest 30 trillion is from the rest of the market, which for a size of the economy, US economy, it is about 100% of GDP. So I think it's not, contrary to assumptions, the moment you take out 7 stocks, the market is very reasonably priced. And I think there are good bargains to be had, in the US markets, right? So that's the broad view, Prashant. It's all good. That's all good because market has taken a very reasonable time correction for the last 3 years. So that's the scene on US. Let me come to India, Prashant. I think to your point, I think the same behavior. Let's see. Nifty touched around the peak of something like 18,000 November 21. And since then, it kind of, spiked up even more to 25, 26,000 now. So that's like almost like a 33% hike, even right from the 2021 peaks that it made. I understand the earnings have caught up, right? We see Nifty earnings from like 425, 430 or to like 950,000 plus. But consider this, quarter 1 was just about 7%, and quarter 2 projections are around 4%. Now, any other market would have taken a very steep 20% correction, especially US, given these earning projections. But, given the flows in India, I think it just continues, right? That continues to perplex most of the investors, especially the foreign investors like me, Prashant.
So you were telling us that how the US markets went through a long 3-year period of consolidation before the breakout took place in S&P 500 this year. Do you think that's possible in the Indian markets case? What's happened has happened. From here on, for the next 12 months, what would the call be on India?
So, Priya, let's consider this. Start from, I understand earnings have grown about 22% CAGR for the last 4 years. But look at the nominal GDP. I like to highlight all the time that regardless of the real GDP number, right, that is distorted by the, how we calculate our inflation and how's the deflator plugged in there. Since 2013-14, the nominal GDP is growing at about 10%. And that's really not in sync with the kind of earnings growth we have seen. Now, it might be because one, the bank balance sheets were very clean, so banks were ripe for a very strong earnings rebound. There was a revenge spending post-COVID, right? So, of course, that had this consumer rebound spending as well. And finally, IT, which peaked in earnings, right, post the 2020 COVID lockdowns. Now, all of these confluences, coupled with the fact that Indian government started spending on infra, I think it created an earning boom. But when has Indian market really shown 20% YOY earnings growth for maybe even 10 years' time? It's not, right? So there are always these peaks that come in, but then there is a significant time correction. I think the time is right that we take a couple of years of time correction. And it'll be, by the way, it'll be very healthy for the long-term investors, especially the SIP investors who are pumping in all the money. History proves all the time that any money we pump in at 25, take it at 25 multiple for Nifty, I mean, I'm counting trailing, it doesn't really give good results in the next 5 years, right? So it'll be very good and very healthy correction if it comes in. I doubt it'll come in though, looking at the flows. Yeah.
Okay, all right, Anurag. Well put. I just hope it's not a couple of years. If I heard you correctly, a couple of years, and it's a couple of months. So that was my colleague Reema, Anurag. But we'll leave it.
Hi, bye.
Yeah.
Sorry. Hi.
Yeah.
Well, we'll leave it there for today. But we'll have you back again soon. Again, good to hear you get your views, Anurag. Appreciate you joining us here on CNBC-TV18. Well.